Hey guys, Aaron here with Carnivore Trades, doing a special video here today. I want to talk about one of my favorite day trading setups. We've actually talked about this quite a bit. I had a few people actually kind of request a video on this kind of setup here. And it's one that I use pretty much every day. We talk about these setups pretty much every day in the live day trading room, and it's very effective. If you learn this setup, you can honestly really make honestly, you could make a day trading career just out of this one setup, if you really were that determined. But what we're talking about is a false breakdown, false breakout, also known as failed breakout, failed breakdown, fake breakdown, etc., slash FBD for short. And it works the best on the ES or SPX. It does work on NQ, QQQ, sometimes RTY and YM, the futures. You technically can use it on individual stocks, but I've noticed it works way better on ES. Why? Because it's the deepest market, and a lot of people won't trade ES for that reason, because it's so deep and there are a lot of false moves. But when you learn those false moves and you learn that you understand that a lot of the moves in ES are trappy, you can take advantage of that. So ES really generally is a big trap fest, and these setups can make money if you know exactly what to look for. It can be used on SPX as well. It's the same thing, but it doesn't have the pre-market data. Sometimes SPX can be a little bit cleaner though. And that's where we're gonna kind of start out here with the first example here. So I just wanna go back here. We're looking at an intraday 10-minute time frame, and I'm just gonna use 5,400 as support. So we know, I could tell you that this was going to be support based off of gamma, 0DTE gamma, not even 0DTE, but I mean even like bigger expiries, weekly, quarterly, etc. Not quarterly, but monthly, as well as that gap window, right? So we have a gap window right here. We gapped up. That was the low pivot 5402. It's a whole round number. We know it's going to be support. That's not important. It doesn't matter what the level is, if we're just using this as an example anyway. But you see here late last week, we pierced below that level, and then obviously we rip back up. This is a false breakdown. Why is it a false breakdown? Because we pierced the low, we closed below it, and then what makes it a false breakdown is when you break back above, specifically the breakdown bar of that breaking candle. So you can see right here, based off of the 10-minute time frame, we could use different time frames as you want, but based off of the 10-minute time frame, this is the candle where technically, as per the close, this became a false breakdown, right? So we pierce support 54, we go down to 53.90, almost exactly to the tick, and we rally back above it. So essentially what these moves are liquidity grabs, right? It's a way to flush out. We had this, I mean, look at we can zoom out here. Look at the big sell. I mean, we can even go back further. Here's a 30-minute. Look at the big sell, right? So big sell off. Massive down move on Wednesday. Thursday morning, we continue selling. So we're already like RSI's in the basement. We're oversold anyway. We sliced that level, closed below it, back above, and guess what? 53.90, you get a 100-point rally in a few hours. Yes, it was faded, but that doesn't matter, right? We took advantage of this in the trading room, took 29 points on the first leg, 50 points on the second leg, and we stopped out at break even on the last leg. So it was a very good trade for us. Even though it didn't follow through, we got stopped out on the last leg, but we had majority, well into the money on our first two profit takes, which are way bigger than the runner position. So breakdown bar here, closing above that. Now, where it gets tricky is, let's go to a 5-minute here. And we'll go there. Now, you could make a case that, so right here was your breakdown bar on the 5-minute, right? And right there is your reversal, right? So it doesn't matter that this was here. What matters is that you have the high right there. That's your 5-minute breakdown, and you closed above it. And then if we go to a 15-minute, you can see a similar thing here, but there's your breakdown bar, technically closed 2 points below, 53.97. And then there's your outside move. Which one of these do you use? Technically, you should use the 15-minute. That's the most dominant. However, there are scenarios where, via a lot of screen time and experience, you can just use it off the 5. You can go right in long off the 5-minute, and take advantage of that move. Technically, though, the safest way to do it is to wait for the 15-minute, and then you just put your stop below the low. Where you cannot do that, again, in this scenario, we're so oversold going to and I mean, there was a massive gamma wall down here. This was not going to break. So in this case, you could have easily gone off of a 5-minute if you were experienced and you know what you're doing, and probably gotten away with it. Otherwise, you'd be paying up another 5-10 points at least to enter at the 15-minute close. In which case, you're going to have to lower your position size because now you're risking almost 30 points on the downside versus a 5-minute, you're risking 10 to 20. So that is essentially the setup. You can also use it on the other side. I want to flip to the actual futures. And let's go back to the CPI. So I'm still going to use a 10-minute time frame. Let's go to July 11th. Bear with me there. All right, here we go. So here's the big CPI pop from the 11th of July. You can see it right there at 8:30. Big down move. It's not a false breakdown yet. Now it's a false breakdown, right? As soon as you get below that. And it's tricky because you're going down really fast. So again, you kind of have to just be savvy. Sometimes you have to just jump on. Let's go to a 5-minute here and revisit that. So let's see how we could have played this differently. You still would have had to wait till that 56.70. So in this scenario, you kind of would have just had to just jump on really hard, short, and then put your stop above this last pivot. On a 15-minute, it probably would have been pretty much impossible to play if you had done it that way. So there's your 15-minute close. Your first 15-minute close technically didn't take it out. Yeah, I mean, and there's no way you should not be chasing it when it's down here anyway. So even though it would have worked out. So at that point, that's an example where you would have needed to just jump on at the 5-minute. You have to be savvy to play that. Again, this is just one example here. There's plenty more. We can actually look at the SPX. And I told you guys, if you'll recall in the daily videos, 56.50 was a big level. We did break above this. Again, we're going back to let's go back to a 10-minute here. That's what I generally key off of. If we go to a 10-minute here, 56.50, I told you guys that was a big level. We broke above it Monday the 15th. And then right here, we snapped below the breakup bar. So you could have technically gone short there. You could have waited for the retrace, or you could have shorted the bear flag, but that was your false breakout. Let's take a look at the 15-minute. You actually might even get a cleaner read on that one. Yeah. So 56.50, there you go. Boom, there's your close down. And even if you had just shorted into the lows, you could even have shorted the back test of 50 right there. There's 25 ES points. Plus this right here. So very good setup. It does work very well. I see it happen every single day. Also, yes, you can use it on trend lines. So let's go back to the well, let me use let's use NQ here. We'll get rid of this fib here. So here's your trend line. Smash, smash, down, broke below it. Again, in this scenario, it's just obviously we're using a daily time frame, but yeah, you close above that, that's a failed breakdown, right? So again, in a vacuum, that's a good example. Another one, if you follow me on Twitter, or if you're in the Discord, I hammered on this and I said NVIDIA 107, NVIDIA 107, NVIDIA 107 yesterday all day long. Why did I say that? Let's go to an intraday. Here's your big pivot from Thursday the 25th, right? Big down move tail candle, and we pop back up. And yesterday we sold off. You see this 10-minute bar right there? What's that high? 106.88. This low here, 106.29. I said, watch NVIDIA. If that gets back above 107, you know, again, in that range, not exactly to the penny, but you get above that breakdown bar, it's going to squeeze. Now, thank you, AMD, right? So we capped up and blew it out. And again, this is an extreme example because we just gapped through it. But in this instance, you can see where this became resistance again. If we had gotten above that yesterday, this would have squeezed up and done what it did today. So this can be used on individual tickers. It works better on heavily traded stocks or heavily traded, you know, tickers or commodities, even for that matter. Not so much on thinner names. Like, don't use it on a Ford. Don't use it on Procter & Gamble. I mean, it's not to say that it can't work. The methodology is still the same, but it works better when there's heavy participation. Why? Because people put their stops in on ES, right? They put their stops in. You know, a lot of people had their stops. Actually, let's go back to NQ. Here you go. A lot of people had their stops right here, right? Here's another example right here. There's an hourly. There's your breakdown bar. We never closed above it. We never closed above it, right? You see that? There's your low. There's the trend line. That's your hourly breakdown bar. Did we ever get above the high? No, not until here. Then what happens after here? 700-point rally. You can see it again here on the IWM while we're looking at it. That's a false breakout on the 10-minute. Breakup bar above resistance. Look at this. This has been resistance for the last, 2 weeks. Boom, big breakout, and we close below it. I think the hourly got saved. Yeah, looks like they saved the hourly low, but on the 10-minute, it failed there. So those are some examples. Again, I'm just touching the surface here, but that's essentially the methodology. When you get that breakdown bar, in order for it to be a false breakdown, you got to get above the high of the breakdown bar. And it depends on whatever time frame you're using. Again, if you're looking at a 5, a 10, a 15 minute, and they're all the same, defer to the 15 minute because that's the more dominant time frame. However, if you're savvy, if you know what you're doing, you're experienced, there's going to be certain scenarios where you're just going to know, like, we're above that, but we're going up. We're going to reverse. And also if the risk reward is good, right? If you're down in the dumps, and again, going back to that that example from back here, like, look at the hourly RSIs, right? In the absolute basement, divergence, 4-hour basement, double bottom divergence, right? So you can kind of assume, like, okay, 5-minute, we get above that, we're probably going to go up, right? Likewise here on CPI, there it is, 7-11, right? There's July 11th right there. That's the same example of the false breakout that I just showed you. Look at the RSI there. That's based on a closing basis. So it was probably actually closer to 90. It was 85, 90 probably up here when it was up there. You probably don't need to wait for the 15-minute, right? So again, it takes some time to get used to, but again, really good setup, works all the time. I look for it all the time. I mean, look at right here, as soon as we close above both these, not that they're necessarily breakdown candles. I mean, they kind of are on a 4-hour time frame, but as soon as you close above it, look at that. We squeeze for another four candles. So really good technique. It works really well. It takes some time to master, but it's something that can, honestly, if you learn it, you can make a living just off of that setup alone, honestly. Obviously, there's a lot of other things that go into play, but if you get really good at that, that is a good setup to learn. And it happens pretty much every single day on ES, so I suggest everybody does put some time into it. So anyways, you guys take care. Let me know what you think in the comments. Have any questions, comments, concerns about the FBD setup? You guys take care, and I'll see you guys all in the next video.